How inheritance tax hits foreigners in Japan. Deeper Japan life in Japan. Japan 101. How inheritance tax hits foreigners in Japan. Pixta.jp. There are many benefits to living in Japan. However, Japan has high inheritance taxes, and if they're not careful, long-term foreign residents may find themselves on the hook for taxes even on inheritances received abroad. Read on to find out whether you're liable for Japanese inheritance taxes, and what to do if you are. What's in a jushu? First, we need to define the term jushu. While there's no clear definition under Japanese law, it's generally understood to be a person's principal place of residence, which can be determined by the location of your spouse, your workplace, or where you hold substantial assets. Essentially, it's similar to your residency for income tax purposes. While you might expect that Japanese inheritance taxes only apply to permanent residents and holders of spousal visas in Japan, that is not the case. Your actual tax liability is based on whether or not you have a jushu in Japan, how long you have had one and when you cease to have one, combined with your visa status. And most common visa types are considered eligible, even non-permanent ones. Who does Japanese inheritance tax apply to? https://pixta.jp. Prior to 2013, if a beneficiary's jushu was outside Japan, they were considered a limited taxpayer, and were liable only for inheritance tax on assets in Japan at the time a relative passes away. However, in April 2013, Japan introduced changes to its inheritance tax laws designed to target Japanese nationals who were giving up their citizenship to avoid taxes on their overseas assets. As of the 2013 reform, if either the beneficiary or the decedent, i.e., the person who died, has a jushu in Japan at the time of death, the beneficiary is also classified as an unlimited taxpayer, meaning inherited assets and gifts worldwide are taxed. In fact, the 2013 law theoretically applied even to short-term residents of Japan. However, the law was modified in April 2017 to apply only to those who had lived in Japan for 10 or more years. If you were a temporary foreigner who had lived in Japan for less than 10 of the last 15 years under a Table I visa, including instructor and specialist in humanities, you were exempt from inheritance taxes on worldwide assets, though still on the hook for any inheritance in Japan. However, if you or your beneficiaries have a jushu in Japan and have lived here for more than 10 of the last 15 years, you're liable for inheritance tax on worldwide assets. Furthermore, if you have a Table II visa, permanent resident, long-term resident or spouse/child of a national/permanent resident, and have a jushu in Japan, you're taxed on worldwide assets regardless of how long you've lived in Japan. In addition, the 2017 version of the inheritance tax law included an insidious tail that held claim to long-term residents' worldwide assets up to 5 years after they left Japan. Meaning if you had had a jushu in Japan for 10 of the preceding 15 years, even on a Table I visa, you and your beneficiaries were on the hook for Japanese inheritance taxes on worldwide assets. Only foreigners who left Japan prior to April 1, 2017, were exempted from the tail rule. Fortunately, these rules have since been relaxed, and as of April 1, 2018, the 5-year tail has been repealed. However, if you return and re-establish a jushu within 2 years of departure, the 10 out of 15 rule applies once more, and you will again be liable for inheritance taxes on global assets. Be extra careful if the heir or the decedent is a Japanese national. Japanese inheritance tax applies on worldwide assets if either one had a jushu in Japan within 10 years of the date of death. What are inheritance tax rates in Japan? Why is this a big deal? Because inheritance taxes in Japan are rather high. In fact, the current maximum inheritance tax rate in Japan is 55%. Up to 10 million yen, 10%. 10 million yen, 30 million yen, 15%. 30 million yen, 50 million yen, 20%. 50 million yen, 100 million yen, 30%. 100 million yen, 200 million yen, 40%. 200 million yen, 300 million yen, 45%. 300 million yen, 600 million yen, 50%. Over 600 million yen, 55%. For those not accustomed to yen, that's 10% on less than about $90,000 and 55% on about $5.3 million or more. However, there is a small reprieve, because the rate is calculated based on the amount received by each statutory heir, see below. You will likely face much less than the maximum rate for the gross amount. How is inheritance tax calculated in Japan? Your tax liability is based on the fair market value of the inherited assets at the time of death, minus funeral expenses, liabilities, including mortgages, and certain exemptions. Before we start, there is a basic exclusion for inheritance tax calculation, which, as of 2018, is 30 million yen, plus 6 million yen per heir. This is subtracted from the total taxable assets to give the aggregated tax base. In Japan, it's not the estate that's taxed, but the heirs themselves, and, as can be seen above, the number of heirs factors heavily into the overall calculation. The total amount due is calculated based on the statutory amount due to each heir, regardless of whether the heir receives that amount or not. So you also can't fudge the totals by writing people out of a will. The final payment is divided among the actual recipients, so even if the will cuts someone out, it's the recipients who have to pay the tax amount. The most basic statutory calculation allots 50% of inherited assets to a surviving spouse and 50% in total to surviving children, divided equally among them. If there is no surviving spouse, the statutory heirs become the children alone. If there are no children, the inheritance passes to the decedent's parents or their siblings, in that order of preference. On the other hand, if the decedent has a surviving spouse but no children, the surviving parents, 1/3 share, or surviving siblings, 1/4 share, are considered statutory heirs in addition to the spouse, who receives the lion's share. Once the number and nature of statutory heirs is determined, the aggregated tax base is then divided among all statutory heirs. And the inheritance tax rate in the table above is applied to each total. Thus, the tax rate is not applied to the gross aggregated tax base, but to the fraction received by each heir, meaning you will likely face lower rates, assuming there is more than one statutory heir. What are some Japanese inheritance tax exemptions? If you'd like to knock your inheritance tax down more, there are some other possible exemptions available. 5 million yen retirement allowance per statutory heir. 5 million yen life insurance proceeds per statutory heir. Property donation to specified non-profit or public organizations.